So hi guys, hope you're well, hope you had a wonderful weekend and you're watching markets actively trying to look for setups. So that's what we're doing here at Financial Hub, and today I'm going to share with you a couple of setups that are on my radar. So today I've started a little bit late, about 22 minutes late. We were waiting for a few things to be sorted before I started, but I'm now good to go. So I'll go directly into sharing with you what I have for today. I want to give people more time to join because at exactly 11:30 I have another meeting to attend. So I have to at least rush through things to be done by this and prepare for the next one before I jump into it. So fundamentally, I think there are a couple of things that I was observing yesterday. This week, today is a bank holiday across Europe. So that's why actually when during the London session, you can't see a lot of momentum in the market. But I think as we head towards New York, we'll see some momentum coming into markets. We'll see some moves starting to play out, some markets taking up shape, and we'll see what will come in line with what we expect or what we anticipate. We also have on Thursday we have ECB, the European Central Bank. They'll be announcing their final decision on rates. I think they're the only bank across the world which has not hiked yet. They're still in negative territory across the rates. So we are very keen to see what ECB will do on Thursday. But everyone expects a rate hike. So I think it's well priced in already into the markets. I don't think they lag too much. In fact, what will be a surprise is they don't do a rate hike. On Friday, we have inflation rate from the US. So we're also keen on that. The last inflation number came in for April. It was lower than the previous one. So from 8.5, we went back to 8.3. And when you're watching some of these numbers, the most important thing to observe is the trend. Has the trend changed from moving higher to moving lower? If the trend comes back lower and it moves lower across for the next 3-4 months, then I think inflation will stop being a very major driver of this market and we could start seeing a new theme develop. Maybe we're moving now into a recession, and as rates go higher, we'd love to see what markets will do towards the recession, in the recession, and how we're going to fight against the recession. Because I think that's the main thing now. Yes, we are fighting inflation, but the effect of fighting inflation is a recession. So how do we come out of a recession after we've fought inflation? That's the hurdle, that's the trade. I think if you're able to figure out what will happen there, you have a trade. If you don't, then probably there isn't an opportunity for you to make money in this market, because I think some of those themes that are currently being spoken about are way behind us. But let me jump into the technicals. I think that's where we have much more of an edge rather than on the fundamentals. On the fundamentals, you have the perspective, but the real edge comes in from the technicals. So yep, I'm sharing my screen. Hopefully you can all see my screen. Today I'll start you off from gold. Obviously it's one of the markets that I really track. I've been tracking it for quite some time, and it's one of the favorite markets for me. So I want to share with you my outlook on it. I'll start off from the monthly perspective, or let me start off from the weekly perspective. I think, okay, let me just start off from the monthly perspective. So if you just look at gold from the monthly perspective, just examining it from a broad range, you can see the last time we had a very huge bull market was in the 2010-2011 years. We had a very strong move to trade as high as the 1900. We then had a sell-off from those levels. So unfortunately this is not showing that, but we had a sell-off from those levels, 1900, to take us back all the way to 1050. That was in 2016. When Trump came in, end of 2016, the market had just started moving higher. We went into a consolidation for quite some time. And when the trade was started, I remember this clearly because I was trading during that time. When the trade was started, which was around 2018, September, August, gold started a huge bull market, taking us from all the way about 1200 to trade as high as 2000. So this bull market has lasted quite some time, around 3 years, from 2018 all the way to 2020. So that was the last time we had a top. This top was in line with the max out of QE, the max out of fiscal policy by different governments across the world. We saw pumping in of trillions of dollars trying to bring back the economy after the COVID crisis, and it really worked, because you can see markets rebounded, some companies rebounded, airlines never went out of business, so it worked to some point. But you can see this was in line with exactly that end, and markets just started selling off. Then you had a sell-off back all the way to 1700. Then you had a move from 1700, which had a top early this year at 2000 again. 2050 was the exact top. We topped that, formed a double top formation, and you can see we've started moving lower. So what do I expect long term of gold? I don't see any bullish scenario on gold. Honestly, gold is not likely to move higher long term for now. Why? We are in a period of higher interest rates. Gold is inversely correlated to rates. So if rates are moving higher, there is a very, very high chance that gold will move lower, because people are moving away from commodities and into cash, because cash is actually likely to yield more. So if you're holding dollars right now, the dollar is likely to yield more because of the higher rates that is currently there. But you also have to discount the inflation, because rates and inflation have to move in tandem. So inflation has to come down and rates have to keep on moving higher for the dollar to yield more. And that's what I think is likely to happen. And with that in play, I think gold has a very, very high chance of trading lower for the next 1-2 years probably. As we head into a recession, and even as we come out of it, I don't think gold will really trade higher anymore. So what do I expect of this market from a broad perspective? One, I'm looking for this market to break below 1800. I'm looking for a collapse all the way to 1700. First target, a break of 1700, and I'll be looking for a move back about to the 1500, 1550 territories. I think that's where we're likely to see gold trading in the near future. If I go into the weekly chart, there's sort of a pattern here. So we had this collapse, then we had this sort of a channel formation which had a top at 2000, rejected 2000, and we've seen a collapse back all the way to 1800. We've touched 1800, had a move higher to reject 1850. And now if you just look at it from a weekly perspective, yes, this huge candle rejecting 1800 has some information, but the last two candles are quite indecisive. There isn't much information that can be gotten off that, and that sends us back down to the lower time frames again, and we have to go back to the daily chart. In the daily chart, we have this sort of a very beautiful channel formation. So we had a drop, a pullback, a drop, sort of an Elliott wave pattern, 1, wave 2. This could be wave 3, because you can see it's quite extrapolated relative to wave 1, and this could be wave 4, and we could be lining up to wave 5. So some of these principles, I don't adhere to them on a day-to-day basis, but sometimes you'll spot them in the market and you can find something. So if you look at this market, there's a high chance we'll reject 1850. As long as we're above this pivot point, 1844, I think there's a high chance we'll tap into 1900, bouncing off this line for the third time. I think that's what I'm really looking for. But if we go below the pivot level, if we trade below the 1830 level, then the whole dynamic could have changed, and this market could be down for a rally. For collapse, I mean back all the way to 1750. So where we are, it's a 50-50 play, but I'm favoring the upside more than the downside. If I go down to the 4-hour chart, there's a very beautiful setup here that I'm looking forward to execute. So this market had sort of a flag formation, a correction back all the way to 1830. We then had an extrapolated move to 1875, rejected 1875, and we've now visited 50. So what do I expect? If by any chance we get a move to the downside to retest this level, 1844, 1842, 1840 to the extreme cases, then I'll be looking for a buy position from this level, taking me back all the way to 1880. In the event of a close below 1844, a break of this trend line, then I'll be looking for a move to the downside. I am not very keen on executing the move to the downside because I don't see the edge of where I'll come in, where I'll set my stop loss and where I'll exit. But for the upside, at least there's a setup there which makes sense. There's a pattern which I can rely on, which can tell me when I'm wrong and when to get out. So that's what I'm watching. I'm more focused on executing a long position, probably towards New York. I can see London has opened. The first hour, you can see markets are selling off, 1851, actually 1850 now. So let's see if we'll get to 1844, about 60 pips, quite good. Then we can look for a long position. Maybe this setup will start playing out tomorrow if what I'm expecting is likely to happen. Next, I look at oil. So oil remaining one of the strongest markets. A simple trading principle you can use to trade these markets is buy the strongest, sell the weakest. I think this market is quite strong. If you're trying to make any money from selling this market, you're likely to lose everything. So if you look at it from a weekly perspective, there isn't any signal of a bearish momentum, no signal of bearish play. Actually, the last two candles were quite strong, signifying that this market is likely to keep on moving higher. A break of 120 and we're likely to see 130. In the extreme cases, I wouldn't be surprised by this market retesting the 2008 highs, which was sitting at the $140 per barrel on oil. So in the event of a extrapolated move to the upside, I think 140 could be the top, or could be where we expect some significant resistance to come in. Moving to the downside though, On the daily chart, we've finally tapped into $120 a barrel. I expect the formation of a new high. If you look at this market, this looks like it was more of a correction, and this is a continuation. So today's trading, we're currently trading at 119. If we reject 120, we could move back lower, probably to 110, 115. But at least for now, I don't see any sign of a rejection, because instead of relying on what is currently happening, I'm relying on what happened last week on Friday, and we had a very significant bullish close. So towards New York, probably I'm expecting a continuation to the upside. But if I go down to the 4 hour, probably we'll get a minor correction to 115, 113. I wouldn't be surprised by that. So let me just log on to the 4 hour chart. Yep, so this is the 4 hour chart. You can see precisely this market came back to 105, went to 120, came back to 112.5, has visited 120 again, and now we're likely to visit 115. I wouldn't be surprised by that number, and then probably we'll visit 125, 130 as these markets keep on pushing higher. Still very, very long. Unless the structure of long positions is broken and the trend is taken out, I still feel like you should hold long positions. Don't put your opinion ahead of what the market is doing. So next I look at the Dow, so 30 of the best American companies. The last 2 weeks, I think the previous week before last week, we saw a move from the 31,500 level, taking this market back up, a very, very strong candle. Last week we saw some bearish momentum, but it was not very, very significant to push this market low, honestly. So I still feel like this market has some upside. If you look at this chart, you can see clearly this looks like it was a collapse, a correction, a collapse, and now we are likely to see another correction. Where am I looking for this correction to head to? If I go back to the daily chart, there's a very beautiful pattern which calls on this market to come back to 34,000, around psychological number. You can see we had a move from 31,000, actually it was the precise number, a very beautiful bottom at S3. We had a move higher, 33,250, rejected it, came back to this level, 32,500, and now it looks like we're rejecting 33,000, and we're likely to visit 34,000 in an effort to touch this line for the third time, and then you could see another bearish leg to the downside, probably to 30,000, which is the next downside level that I'm watching on this market. So for now, quite long. If I go down to the 4 hour, this was one of my favorite picks for the week. I executed a long position early in the morning today. I'm looking for this market to just visit 33,500, and I'll be out. We're currently at 33,150. So let me see if we'll break past this counter trend line, which is what I'm watching. If we take it out, then there's a high chance we'll visit 33,500, and in the extreme cases, probably we'll even 34,000 level. I wouldn't be surprised at all by that move. So that was a beautiful first, second, third trendline bounce, and you can see now some bullish momentum is coming into this market, and we're likely to visit this level, and precisely even 34,000 I think could be easily tapped in this market. So that's my outlook on the Dow. Next I look at GBP USD. So GBP USD trades inversely to what the dollar is doing. So I'll look at it, I'll look at Euro Yen, and then I'll close out with the dollar. So looking at GBP USD, let's start off from the weekly chart. I still think these markets have priced in most of the rate hikes that most people are talking about. As much as we may be having another 50 basis points on the way, I think that one is priced in. What is likely to happen in these markets is we're likely to see a pullback despite those rate hikes, because no one does not know that we expect a 50 basis points rate hike. I think everyone knows that, and markets have priced in that one. So what is likely to happen is we're likely to see a pullback as we seep in some of the effects of those rate hikes in the economy, and as the effects become more tangible, more clear, then these markets will start pricing in those effects. So I'm still long on these markets despite a rate hike coming in. I think this market has a high chance of moving to the 1.3 level. We've rejected the 1.25. I think we're likely to visit the 1.3 level. If I go back down to the daily chart, you can see quite clearly that we went higher and we came back to retest the 1.25, which was a pivotal level. We've retested the level, and you can see some bullish momentum is coming back into this market. We are now 50 points above the 1.25. I think we will visit 1.275 and ultimately 1.3 level, the level that I'm talking about, before the next leg of bearish momentum, despite a rate hike coming. But along the way, things could change, and price action, I'm sure, will show me when things will change. So right now, I'm just basing my decisions on what is happening on price action. So if you look at it from this perspective, you can see clearly we had a move to the downside last week to retest the 1.25. This was more of a magnet trade coming into fruition, coming into completion. Markets just looking for liquidity level 1.25, came back again for a retest, and now we've started moving higher. So what do I expect long term? I think there's a high chance we'll visit 1.2625, the R2 level 2650. We could see another correction, and then we could see a move to 1.275, 1.2875, and ultimately the 1.3 level, which is the last upside target that I'm looking for on GBP USD. So still some upside on that one. Euro yen, this market is quite strong. This is a carry trade. Most people are selling the yen and buying euros and other currencies, because the yen is the only country using a policy whereby they're still printing money, they're still devaluing their currency. And if they're doing that, then people are likely to ditch that currency and run for the currency that has higher yields. And you can see the yen came back from 125 to trade as high as 140. I don't think we've stopped. I think there's a high chance we'll visit 145 level, probably even 150 if rates keep on moving higher, and in Japan rates are moving lower, then people are likely to dump the yen for these other currencies, and I think the yen is likely to move higher. Obviously, you can see these last two candles, no sign of bearish momentum, honestly, from the 140 level. So we're likely to keep on moving higher. On the daily chart, we had sort of a flag formation, a correction, and now we've retested 140. We've broken actually past 140. I think we could visit 142.5. If this momentum continues, I think 142.5, 145 is a very good level to look for targets as this market is moving higher. But on the 4-hour chart, I may be holding a different perspective, a different narrative, at least for the short term. Probably we'll see a minor correction to 138.75 as these markets look for fair value. We've seen a very extended move from about 135 to trade as high as 140, about a 500 pip move. So we could see a correction to about 125 pips, 130, 140. In the extreme cases, we could even visit 137.5. Probably another flag formation before another move to the upside. But I'm not here in the business of predicting. I'm here to watch markets. So if these markets take out this level, I'll be looking for 142.5. If they reject the level, I'll be looking for 138.75 and 137.5 to the downside. No trade for me on that one, because I don't take part in counter trades. If I just look at the daily chart on the dollar has moved higher for quite some time now. We've seen a very strong bull leg from about 90 to trade as high as 105. We tapped into 105 and now we've started a correction. We're now at 101.619. Last week we had sort of a bullish momentum, but you can see there wasn't much bullish pressure. So we're likely to see some bearish momentum again taking this market. I'm watching 100 flat to see what will happen. If 100 is taken out, I'll be looking for the other major levels that I normally track on this market. So you can see clearly first, second, probably a third bounce here. If we get some good rejection and move back above here, probably a turn. But if we break this, then I'll be looking for these markets to come back probably even to 98, 99, 100 level before the next leg of bullish momentum. So that's my outlook. Those are the markets that I normally watch on a day-to-day basis, week-to-week basis. I've shared with you what I expect on these markets. Unless there's a question, I'll stop there. But if there's a question, I'll answer, and then I'll stop and move on to the other things. So if there's a question, just post it on the chat room. I'll give you guys about 2 minutes. If there's no question, I think I'll stop there and I'll see you guys next time. I think for this one, a better option will be jumping on. Caleb has shared his outlook on different currencies, and he normally tracks USD CAD on a day-to-day basis. He has a journal where he shares it to the public. So what I'll do is I'll place the link of that journal on this video once you upload it on YouTube within the course of the day, so you can use that to track his outlook on USD CAD. I think that will be a more reasonable outlook. It will be more reliable and probably have a higher probability of playing out, other than me jumping into markets which I don't track on a day-to-day basis. So I think I've covered that one, Fabian. So I'll just upload it. Once this video is uploaded on YouTube, probably before the end of the day, you'll have your outlook on USD CAD, at least for the week, and then you can keep tracking the journal for better outlooks. So any other question? Okay, so it looks like there's no question, at least from you guys. So I think I'll stop there. I'll catch you guys in the next one that I'll be doing. Today in the evening, I'll be doing a small presentation on how you can improve your trading psychology when you'll be trading, because psychological factors are very important for trading. Trading is not about how the market moves, it's about how you respond to how the market moves. Once you understand that, you move your attention from what the market does to what you do. And once you move your attention to what you do, you have the control. But if you have your attention on what the market does, you don't have any control. So pay more attention to how you behave around the markets, how you take trades, what you believe in, where you place your entries. That's what is really important, not what the market does. So I'll catch you guys in the next one, maybe in the evening, if not in the evening, on Monday next week. So see you guys. Peace, and may the peeps be with you.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.